Welcome back. It is Fed Day. The Federal Reserve widely expected to raise interest rates today for the second time. In 10 years. Joining us right now is PwC Financial Services Advisory Practice Leader Dan Ryan. Dan, good to see you.
Good to see you,
Thanks
Maria.
so much for joining us.
Absolutely.
So an increase in interest rates today by the Fed. What do you think that means for the financial services sector?
It's phenomenal. I think we've been struggling in a very low rate environment. I mean, the average bank now. It used to be that they'd have 1.2 loans for every dollar of deposits. Now it's the other way around. It's like 80% of loans versus deposits. So they've got a lot of liquidity. So if they can deploy that and actually make some money on it, it's good. I think Morgan Stanley came out with a report recently that 100 basis point increase in interest rates means 5% bottom line to banks.
So it's a wind at their backs right now.
I think there's a lot of wind at the backs. If you start to look at Dodd-Frank, you've got over 22,000 pages of regulation that has come out from an alphabet soup of agencies, from the SEC to the CFPB, people that haven't been elected that are trying to impose their will on the financial sector. So what do you think the biggest rollback's going to be that's going to help unleash a lot of value for the banks? Is it going to be the reduction in different compliances when they get certain sizes in AUM, or what's going to be the biggest beneficiary for
I mean, this is our view, and in this environment that we're in, it's our best guess in terms of where things go. But I think the effort to repeal Dodd-Frank or to really do major rollbacks is probably not really where he's going to get his biggest bang for his buck. Trump hit the lottery in terms of actually changing the players. So our view is he's not going to change the rules as much as he's going to focus on changing the referees. 7 of the 9 FSOC members, who are the guys who kind of oversee the economy, he'll be able to appoint new ones within the first 6 months to a year in term. And really, when you talk to the bank CEOs, it's not so much around the rules that's the problem. It's really the enforcement of the rules and the interpretation. And then, as you see in the papers, kind of the public shaming. So in many respects, I think just changing the refs will be a lot better than changing the rules, and a lot easier to accomplish.
What about acquisitions activity? Are you talking about big buying medium, medium buying small, small buying extra small? Like what does that landscape look like?
Well, right now there's absolutely no M&A in the space, right, when we talk about banking. So, and the typical regional banking strategy was acquire, 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 and grow, right? And a lot of the smaller banks are struggling. We still are way overbanked in this country. So we do think that with a few new referees in place, that M&A will open up, particularly in the middle, kind of the regional sector. The big guys aren't going to be out there making acquisitions in a big way.
How do you change the narrative, though? Because people think the banks now are still too big to fail. You even have a Fed governor, Neel Kashkari from Minnesota, saying that they are too big to fail. How is that going to be addressed by the banks?
Yeah, well, the reality is we are where we are, right? So, I mean, the biggest banks have gotten bigger post-crisis, healthier, stronger. So I think the narrative is really around global competitiveness. So when you look at it, we're at the pre-crisis, 16 of the biggest 30 banks in the world were European banks. These guys are suffering tremendously. They're peeling back. They're regionalizing. Someone's got to bank the new world, and it will be the U.S. banks. So, if you play into the Trump narrative on U.S. competitiveness and U.S. jobs and the like, the banking sector is actually a big play.
Well, thankfully, because we almost missed that window, by the way, with all the regulatory strangling of the banks. You were looking at HSBC. You were looking at a lot of the Asian banks really becoming dominant. What's your take on 2017? How do bank CEOs see the environment in 17 under Trump?
Yeah, well, I think the three biggest things are, the potential tax rate reductions, interest rate rises, and then ultimately kind of decelerating of regulation, and in that order. So, the reality is that the economy has kind of grown off the backs of the consumer, who's highly leveraged at this point in time. There's been very little corporate spending. The way corporates have raised their EPS has been to buy back shares, right? So I think we think that there'll be kind of stimulating economic growth, will be higher loans, and then the banks will be able to kind of benefit there. And then also the regulators have been holding back bank dividends and stock buybacks and the like, and we think that'll open up a little bit more and stimulate the economy.
That's such an important statement, that the banks are actually going to start unleashing money, investing in jobs, investing in their businesses. That's going to create lots of activity.
Absolutely.
That's going to move the needle on growth.
It is, and consumer confidence. But also, I think one of the things that we've seen financial services companies struggle with is reputation problems. Like, people are really critical. They feel beholden, not thankful. They don't know what they provide. They see them as greedy. And I think we're going to see a real shift in that narrative, which could then really have an impact on.
But some of that comes from politicians and the talk out of Washington. But a lot of it is a person-by-person experience. It's just bad experiences at the individual level dealing with their specific bank. It's like if you stop sticking it to your customers, then people will feel better.
Yeah.
And a lot of that they've done because of they're struggling with the regulatory
But President Obama was pointing fingers at the banks.
Yeah, look, the banks.
They were the enemy.
Banks have been the enemy since Shakespeare and the Merchant of Venice, right? So you're likely never to change the entire narrative over. But for the most part, the banks kind of lost their window of demonstrating purpose and value to the economy. And then, you know, the Obama administration really put the nail in the coffin.
I mean, one of the greatest movies of the last year is Hell or High Water, and it's about two bank robbers. And they're kind of the heroes of the movie, quite frankly.
Yeah, no one will love the banks, but if we can kind of take the hatred down a little bit, I think it'll help everyone.
Dan, good to see you.
Good to see you, Maria.
Thanks so much. Dan Ryan joining us there.